it seems to be clear at this point that AI is real and it's here to stay. So today we're going to be looking at 3 separate AI stocks, AI-centric stocks that have already seen some benefit from AI. They're up quite substantially. They're all growth stocks, meaning they have higher PE, higher growth. But all these stocks are related to the AI field, and we're going to dive into each one of them individually, starting with Vertiv. I like Vertiv quite a bit. It has already benefited immensely from AI and data center investment. They do lots of key infrastructure and services related to data centers. And you may say, data centers, that's not AI. Well, all the AI chips are stored in data centers at this point, and I can tell you, working in a pseudo data center, that Bitcoin data center, AI data center, all those have extreme overlap, and Vertiv is primed. They're in a good position to benefit from that, and already have. They have near 20% year-over-year growth in terms of revenue, in terms of earnings per share, roughly over the last couple years. They've already benefited immensely, and they look to continue to. I mean, you can say, okay, ADP is expensive, and I don't disagree with that. ADP is expensive, but once you've, over the last 5 years, S&P 500 is up about 200%. This is basically 5x that performance, a little less when you count dividends, but let's just say 4x the S&P 500, you would expect the PE ratio to be rather high. And if we take a look at the forward PE, this looks a lot more reasonable at 33 forward PE. You can say, oh, this really isn't that insane. This is a company that is growing dramatically. It shouldn't be surprising that the PE ratio is high. Forward PE ratio has some expense to the S&P 500. This is a stock that has grown crazy fast, and if it continues to grow at these rates, you're going to see earnings coming quite quickly. Like I said, for growth stocks in numerous videos before, you do have to factor in 2 factors: if there's a recession, or if this stops growing at the rate it is and starts growing like a normal company. You're going to lose money, both because in a recession, stocks like this that have higher PEs get hit harder just because they're associated with more risk. People start transitioning money to more value stocks. And then also, if they grow like a normal company, their PE ratio is going to be valued more like S&P 500. But outside of that, growth companies, you can make a lot of money quickly. And then we're going to dive into Nvidia. I don't think I'm saying anything super controversial or wild here that, Nvidia is a good AI stock. They have dominated. AMD's doing similar stuff. They don't really have much of any market share at this point. If they'll carve something out in the future is a different debate for a different day. But at this point, Nvidia is the clear number one. They are dominating the market. Basically, AI runs through them. That's just the reality. So they are primed to make a lot of money. They already have made a bunch of money. They're one of the 3 most valuable public companies in the entire world. So it's really not that crazy to think that they're going to continue to do well. They've proven to have done that. They're primed well for the future. Even if they have 80% market share, they're still going to make a bunch of money, which they have closer to 90, 95 at this point. Let's look a little bit at the forward PE. We can see normal PE is 50, forward PE is 33. So this is in the similar realm that Vertiv is. You would expect a company that's grown like they have to be valued around these PE metrics, maybe even a little bit higher. But when you're growing this fast, it's often hard to value the company. Now, is this screaming, or any of these companies screaming super cheap? Not really, but they've grown very, very, very well. Nvidia is still primed to do that. I'm not going to spend too much time talking about them. I'm going to move on to the last one, which is the most different. So KLA is a company that you're like, okay, what does this have to do with AI? So they provide critical resources in the semiconductor development space. So basically, there's like a supply chain, right? If you're getting let's not use that example. I was thinking of a dumb example, but basically they provide key machines that TSM and other companies like Samsung use to make chips that Nvidia requires. Nvidia can't make the stuff they do without TSM. They can't make the AI chips without TSM, and TSM can't really make anything without KLA and other companies kind of like AMAT and ASML. There's plenty of them. So there's a really interesting thing where there's an entire supply chain leading to Nvidia that is very, 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 very important. And often these stocks are not crazy expensive. PE ratio of 29. We'll take a look at the forward PE ratio in a little bit. Up to 67 is not nearly as much as 1,000 or 2,000% like Nvidia and Vertiv. However, 267% in 5 years is still very good. It really is, especially once you consider the dividend is about S&P 500 as well. This is a stock that has nearly tripled S&P 500 performance and really is not that expensive. For PE 21, you're actually below S&P 500 for PE. So you're a company that is key in making the AI thing possible, the AI chips possible, AI itself possible. You have cheap PE that's cheaper than the S&P 500, over the last, it is. And then over the last 5 years, you have tripled the performance. So this is a good stock. This is a stock that's important. There's others similar if you want to take a look. AMAT, ASML, there's one more on the top of my head I'm not thinking of. But yeah, anyways, all these stocks, like I said, are they going to just continue to go crazy? We do not know this, but these are all important AI stocks that are going to benefit from AI if it continues to do well, as most people expect it to. So anyways, I appreciate you all for watching. If you enjoyed, like and subscribe. I do daily stock content on this channel. I appreciate all of you for watching. I'll catch you next time.